To the new month. It's Monday, the 2nd of March. You don't need to tell me what happened. Yeah, I don't need to tell you what happened over the weekend. Obviously, impacts all of us in some way or another. Just pray for a peaceful and quite well. It's not going to be peaceful, is it? But a swift solution. Obviously, I won't go over all the news of the weekend, but as he said on Wednesday, was it Thursday night? Trump he wasn't happy with Iran and consequences as far as the negotiations are concerned. Anyway, seem to be going okay, but yeah. Anyway, not happy with Iran. I'd love not to use it, but sometimes you have to. We said on Thursday night talking about force. So stocks were down on Thursday, down again on Friday. We shall see. Preemptive strike from the Israelis. Obviously, clearly, that strike was the one that took out the supreme leader of Iran. Issues, obviously, in previous situations, been a bit of a power vacuum in these situations. But the RGC, the Islamic Revolutionary Guard Corps, the hardline members that really rule Iran with that iron fist, remain somewhat depleted, obviously, but remain very much in touch. Nobody on the streets yet because of the barrage of missiles. Nobody taking up arms to try and stand against the regime. So markets have had their somewhat anticipated moves. The interesting ones for me this morning was really the lack of selling on the crypto front and also the lack of the bid on the gold front. Everything else was a little bit obvious what may have happened on the open. So I've got the euro here, euro dollar. Dollar's been bid. Swiss franc less so, interestingly, and less so the yen as well. Aussie yen, normally a real barometer of stress. Obviously, both countries outside of the immediate war zone or immediate impact, but obviously the whole world is going to be impacted by this situation in the Middle East. Interestingly, had a rally and then a fall. You would have thought I'd have expected it to come the other way, but anyway, we'll have a look at everything in detail later on. Guys, if there's anything you want to have a look at in particular, let me know. Stick it in the question box, and we'll look at it together. But so the Supreme Head Khamenei's been taken out along with three of his troop members of his inner circle who were meeting on Saturday morning, and clearly that's scheduled to meet later on Saturday, actually. But sounds like there's some intelligence got to the Americans, or the Americans have got some intelligence out. So all scary stuff, isn't it? And the Israelis had that preemptive strike, and it's ongoing. Obviously, Iran has responded, not in kind, but responded, and it's been a bit, splattering around. Initially, obviously, they talked about US targets in the Middle East, but it's really been quite sporadic, and even 2 missiles falling in the Akrotiri base in Cyprus. So everyone, allies or otherwise of the West, fair game as far as the Iranian regime is concerned. But as I say, no particular noises from the people. Looks like Trump and Netanyahu's plan is to try and get the local population to rise up again, as they did in a few weeks ago. But they were crushed very significantly, weren't they, by the emboldened regime, or the regime that kept going until people were off the streets. So quite a scary situation for the ordinary Iranians, and not only the economic situation, but now missiles raining down on their major cities as well, not just Tehran. So, as I say, as far as the market's concerned, they do what they do, unfortunately. Good or for ill for the human race, but so the dollar is strong. So euro's down to this 117.25 area. Dollar yen is 157.50. So that was bid. That's going to be really slow, isn't it, today? Let's try and close them out. There we are. Strong bid on open here for the dollar versus the yen. So we're back to this key again, technical area at 158. So we probably see some resistance at 158 if we can break through the 157.50. But the uptrend has been exaggerated by the move for the dollar today. Dollar Swiss 77 18. I'm just going to go through these in order. Crypto GMA. Hello, mate. Anything you're interested in having a look at? Anything you're interested in trading or commenting on? Let me know. We'll have a look at the charts. How are you doing? How's your account doing? So again, even against the safe haven or typically safe haven currency of the Swiss franc, dollar's been bid quite significantly today. Big engulfing candle. Technically, we see how it all fans out. Obviously, the other thing that's worrying markets is uh, Trump saying, this could take weeks. We want to get rid of all the ammunition. Want to take the head off the Iranian regime change. He hasn't actually used those phrases himself, but he wants the people to rise up with the support of the American hardware to do that. But if he's talking about taking out all the ballistic missiles that Iran has, um, that he's saying could take weeks. But again, they might be overestimating how many they've got or they've been supplied both by the Chinese and the Russians. So obviously big issues on Putin's plate, but Putin's just sitting back at now and watching, no doubt, as things span out, and obviously always playing for his own end is old Vladimir. So 77.80 Swiss, which you would expect to say might have not weakened as much as it has against the dollar. Dollar CAD Loonie was weak anyway, so 136.75. This has continued to move to the upside. Dollar's preference. Aussie 77.78. So the Aussie has come back under 71, but actually come up today. So the Aussie's bid, as you can see today, it's bounced off after a weak start. It's an interesting move on the Australian dollar. Obviously, their markets, the Asian markets, opened earlier this morning. So interesting to see the big gap down for the Aussie dollar, and it's come back. And then it came back down again on the European Open here this morning. So very strange moves around the Aussie dollar in particular, but it's sort of bid again. As far as today's concerned, it's still under a 20-day or 20-hour moving average so far today. So capped once, twice, three times now. Testing again at the moment on the US Open. Sterling week 134.20. A move a bit like the euro, but then has come back as well. So this is the opening volleys, opening trades last night. We 134. We gapped under 134.50. We went back to test it. Then we legged lower in the Asian session, and as Europe came on tap, we went as low as 133.15. And during the European session, we moved back, a bit like we just saw with the other, that was it the Swissy chart, back to our 20-hour moving average. So that's playing a key role today. So once, twice, and now a third time we're testing it. Are we going to break back through it? So 134.20 at the moment for cable, but under the key 134.50, and more importantly, the 135 sterling. But that's, it's just continued a trend that's been going on before the first missiles were fired. As I put a note on our Discord group yesterday, or was it this morning? I can't remember now. But markets hate uncertainty more than they hate anything else. So the irony of the first missiles being fired in any war sometimes clarifies things. I remember back in 2003, the shock and awe of the Allied invasion into Iraq. It talked and talked and talked for a while, and that beginning of March. It was 2023, wasn't it? It's 20 odd years ago now. Well, the markets rallied quite strongly on that day as the war started. There was no sort of real opposition from Saddam Hussein's gang, but really, as the missiles were raining down, stock markets rallied bizarrely. But that's what happens. Markets like the clarity. So the bid on the dollar has faded during the day, basically, is what I'm saying, but it's still on the up. So you can see what's happened here on the move. The one that did catch my eye is this Aussie yen. Now, Aussie yen is seen as a typical measure of risk in the forex market, but look at this big. This is this morning. There's Friday's close, 110 or round about 111. and we gapped on open all the way down to 109.50. So a huge gap on open, but then rallied. So the Aussie bid was bid against the Swiss, against the yen. Then it faded into the European open. Then it's been bid again. So the Aussie dollar outperforming some of the other currencies today, and moving to the upside here against the yen. So you'd have normally seen speculation for people to be buying the yen, but that hasn't happened today. So trade what you see, not what you think or what it should happen because it's happened in the past. Trade the charts, trade the here and now. You make your profit in the here and now. You make your losses in the here and now, not looking back at history and what should have happened. Well, in other wars, it's done this, blah blah blah. Trade what you see, not what you think. So Aussie yen back above where it was Friday. Interestingly, on 11.50. To the upside. So that's the forex market. Obviously, the big move and what everybody was focusing on over the weekend was the oil market. WTI at 71.20. So we were over $75 a barrel at one point this morning when we gapped on open. So this is there you go. That's what we call a gap, isn't it? It's the hourly chart here for WTI, closing on Friday around about $67, and we opened at $75 this morning. Gave an awful lot. Excuse me. Sorry. Oh, sorry. Let me move my great big head. Hang on, the screen's a bit bigger. Moved all the way back down to the key $70 handle, and we've held above it ever since. So we bounced to 73. So from 75 to 70, back to 73. So recovered over 50% of the loss, and now we're back down to 71. So in crude terms, we're just going to trade the price action today here on the little fib chart. See, there we go. Back 50% plus into the 61.8. It looked like we were going up there at the European Open. We gave some of it back. We came back through 50, back to 38, and now we've breached 38. And we're back to the 20-day or the 20-hour moving average now at the 23.6 fib level here. So if this holds, we may drift higher. As news percolates through, we may give up the ghost. Obviously, as far as end of day traders and gap traders are concerned, what sort of gap have we got here? From body to body, it's a monster gap here on the oil market, but one would expect that. So 76.45 was the close on Friday here, just using our derivative charts here. The opening body was at 71.178, so it's a big old gap to close. So watch that. Are we going to remain bid? Obviously, the Strait of Hormuz, 20% plus of the world's crude oil and liquid natural gas, and quite a few other assets go through that very narrow strait between Iran and Oman. The Iranians, well, most shipping would have been a bit freaked out about moving through it, and they're all backing up either side of that Strait of Hormuz at the moment, particularly trying to get in and trying to get out through that narrow gap. So speaking of gaps, that's the one to watch on the oil chart. Brent, very similar. We went to $80 on open this morning. That's the daily chart. The old doji candle at the moment. As we've done the same as WTI did. So big old start, $280 for the European Open, and it's given some back, but less back than WTI. So the Brent, the global benchmark, is hanging on to its gains more than WTI, interestingly. So 78.50 Brent and 71 respectively WTI at the moment, both bid on the day, as you might expect. Crypto, obviously, it was traded over the weekend, and it interestingly moved down, as you might have expected here. This is Friday morning, ironically. Saturday morning as we moved down. So we went as low as 60, under 63. But for the rest of Saturday and the week, and then for Sunday, we actually gained and went to $68. 68,000, I should say, over the weekend. Obviously on lower volumes, but sorry, I'm going to talk over the. I've talked over the news. Sorry, let's just. We'll come back to the impact of the attack by Israel and the US on Iran and the killing of their supreme leader. and how it's impacting the charts in a minute. Let's just have a quick look at the data that we're here to look at today, which was the manufacturing PMI data. Remember, manufacturing has been in recession in the US in particular, not in particular, but globally. The German manufacturing heartlands have been under lots and lots of pressure. So, interestingly, a bounce and a positive, quite a positive bounce. But look at those prices. Look at those prices spiking high. That's a massive, massive, big jump up in manufacturing prices from under 60 to over 70. That will cool markets as well, even though PMIs have got back to where they were more or less last month. So it's down a little bit on last month, better than expected at 52.4. It was expected 51.7. Hope you can see that. Yeah. And so look at the a chart here. The key thing is that we're actually following through from last month as well, when we broke positive, when we had our best month since back here in October, no, September 2022. So it was a very positive month. Remember saying last month, was this an outlier? Remember, this is actually data that hasn't been delayed because of the two government shutdowns we've had. So this again, could be signs that it's not just sentiment that's and these data center build outs, this stimulus that Trump has given or incentive that's given US companies to bring jobs, manufacturing jobs back, and other global manufacturing jobs back to the United States, may be showing signs of bearing fruit. Remember, the key thing about the PMI data is it's forward looking. It's not what's happened; it's what may be happening. So it's how these guys are feeling, these purchasing managers, how they're feeling looking forward. So it's actually in expansion for 2 consecutive months, the first time since September and October, when it was going down, and we're a great big downtrend, wasn't it? From the glory days of the post-COVID stimulation and stuff. So, it's struggled for 2023, 2024, and all of 2025. And now we are positive, and we've held our gains. Not as strong as we were expected to be. Yeah, it's not as good as last month, but it's better than expectations. So that's a strong number. The big caveat, though, is the inflation number, 70. Look how, again, so this is suggesting that prices are still rising for manufacturers and other industries. So if you compare this chart, the one we just looked at, so the prices that manufacturers are charging, or having to be charged, of remain sticky. It looked like they were coming down as all of this in contraction, but that spiked up quite significantly. So are we back to these levels we saw earlier in the spring of 2025 for the beginning of 2026? So big old question mark over there going forward. So nice positive second month of expansion for the PMIs, but quite a spike and a surprise to the upside for the prices charged. So it'll be interesting to see what that looks like when I get a chance to look at that data offline later on, my friends. So that's the data. Let's have a look if it's had an impact on anything. I'll come back to Bitcoin in a minute. That floats around in all sorts of. Come on. I might have too many things open at the moment. Yeah, that's too much going on this workstation. I think I've got two. Yeah, there we go. So Dow was rallying rallying on open. It'd been down before, so let's see if you just close that, and I'll come back to that. Leave that one open because that takes up time. I'll close that as well. I'll come back, guys. There we are. And I'll come back to you as well. Right, okay, that should speed things up a bit now. Too much going on the. No, it hasn't. On the workstation. Right, indices. So the US markets, as we saw this morning, actually start with the morning some morning trades I was doing. So this just capitulated this morning. The DAX opened again, big gap on open, and we traded this down this morning, or I did. Early morning moved down. Then we bounced on open, and then we retraced again, and we've bounced now on the US. Oh, but you can see the trend is down. If we look at the daily, as you might expect, you look at the daily or even the 4-hour time frame. Big gap on open, down, consolidation, down, consolidation. The 4-hour candles, but you can see the two big down ones today are much bigger than the bounces up, and lots of volatility in the meantime. So the trend remains very much to the downside today. Where will we find a floor? Well, let's look sideways. We found a floor here initially at 24,725. But as you can see here on the 4-hour, really it's down to here, this Trump speaking 24,350 back here at the beginning of February is the next support on the 4-hour chart. If we look at the gap on the daily chart for the DAX, big almighty gap this morning, as you might have expected. And you can see there, the daily chart has support on this line here when Trump started speaking. 24,300 is a big support area. So there's still a lot of fresh air, still another 400 points to go before we get down to there. But the first stop is the bottom of the Bollinger Band at 24,500. But that's down on the day gap. Obviously, these gaps can be closed quite quickly if things move on. But as the news is coming out, the bombardments continue. The Iranians are still responding. Obviously, the death toll is going up quite significantly. The Americans have lost their first personnel. They've lost an F-16 fighter, I think. But it's the spread across the Gulf as well, which is impacting people as well, which we might not have expected from the Iranians. But it's an interesting response from the regime to really get other targets, or wider targets than they had last June when it all kicked off last time. So obviously the proxies, Hezbollah has been hit by the Israelis as well today. Nothing yet out of Yemen, but time will tell how that all runs on. So the DAX down. So let's just have a quick look at how the US markets are doing. In fact, let's look at the FTSE. Remember, FTSE hit all-time high on literally on Friday, but again gapped on open and down today. So the Nasdaq 24,865 as we speak. So perhaps not as exaggerated as some of the other markets. The gap from Friday to this morning's open isn't as exaggerated as some markets. So that's, should we say, interesting. However, we are in the under half of the Bollinger Band. The trend to the downside is still in place. And we went as low as 24,400 before we saw buyers today. So it's, that intraday spike there. And then it didn't get interesting. I'm saying interesting for me. Interesting we didn't get as low as many might have expected. At that 24,300 level. So we're under 25,000, but we didn't go as low as maybe some were expecting. So we have a look at the hourly chart on the Nasdaq. And there we go. So you can see the decline during the Asian session. Buyers kick in as Europe opens this morning. There's the low of the day, 24,435. And up we go, down we go, and then a big candle here on open. So stock markets in the US, the cash market is open positively. It was lower. Futures were lower. We're open. We're still down, obviously, from Friday's open, but that's quite a bounce on open. But we are literally 40 minutes into the opening session. And if we go to the 3 o'clock candle, let's see what the impact that has had on these 5-minute charts. So the data has been viewed positively as well. 24,843 is in there for a reason. I don't know why. It just is, but it may be those from other times, other zones. There we are. So it's a high, it's a support here. So again, that would have been a target area. See how we got to it and then came back down from it. So that was a bit of a zone. I think I put in those orange lines. But if I'd been long this on the open, these lines would have been on there, so I might have taken some off as we've gone through these 3 lines to the upside. But certainly that would have been that's a target area when it's purple. So I would have probably been out on that opening salvo. But you can see here on the 5-minute chart, we're still moving higher. We're you'd say very overbought. I'll just put that down. Actually, I don't want the system doesn't run with the MACD, does it? I just realised is that so that would have triggered you long there if you'd had balls of steel really. Trading that long at 420 before the cash market opened, and your stop loss down below that low of the day, that wick there, you'd have nicely in the money, but it'd been a bit of a gamble, but it would have paid off. That's what happens in these situations. So Nasdaq moving higher. S&P 6856 or 6865. It's moving higher here, and these were just arbitrary. They weren't actually related to the 70. I just moved these out of the way, so these wouldn't have been in play. I would have expected this to have been tested, but it hasn't here. The Trump zone on this one. But again, another one. If you'd had 5 minutes before the open, gone long there. Well, there's a clear cross, but I see. So we haven't actually touched the outside of the Bollinger Band. See that? See what's happened there? So actually it did, didn't it? It would have done. It would have touched there, and then the cross there. So that would have been a legitimate, and it's touched also in that 5 minute time frame. So a legitimate entry there. Nice gap on the K in the D line, and just raise your stop loss as the market moves up. And stay long if you haven't already, because we haven't touched yet. But a positive bounce for US stock markets, possibly lifted a little bit by the manufacturing PMI data being better than expected. But there's a big caveat in there, as I said, with the manufacturing prices being as hefty as they are. It's coming in at 70. So watch that as we go forward. So S&P's up, and the Dow. Also performing a bit like its two other brothers. There again, 1425 would have been long on this strategy. They did touch the outside there. Now we've crossed here to go upside. But whether you would have taken that, the system would have done it, because it doesn't. It just takes it because it's just coded to take when the rules apply, and it would. Would still be long, that one, if it pulled the stop loss up too aggressively. It might mean stopped out here, but it's probably still long because we haven't had a touch of the K and the D line. So that's a nice old start for stock markets, having been down all day pre-market. So, but if we just take a step back to the daily time frame, little gap here or no gap here, interestingly, on the Dow. The S&P, we didn't check, did we? S&P, it's down, but again, no gap from last night's, from Friday's close, as far as these derivative markets are concerned. So there's not a gap on this mark. So stock markets perform a little bit. Let's look at the DAX. You see, the DAX had a gap. The FTSE was gapped on open, didn't it? So it might be just the way the feed has fed. The Aussie, the ASX, which again hit all-time highs on Friday and in February, gap on open there clearly. And the Nikkei also in the front line, a bigger gap on open, but still above its 20-day moving average, and a very small now doji candle for the Nikkei. So interesting. We're not seeing gaps on the US markets. The cash market has gobbled up those futures gaps. And finally, everyone's favorite, gold, obviously had the bid, but again, as I said at the top of the shop, not perhaps the bid many would have expected, including me, to be honest. As you can see here, as I keep saying, markets hate uncertainty. And this was this all-time high here at the end of January, when we had US yield at 4-month high, the strike of the fleet off Iran. Trump said he wasn't bothered about the weak dollar, and gold continued to rally, only to crash 2 days later. So whether Trump had any insider deal, what could I possibly comment on that? Would he? He's not the sort of character to do that, is he? And down went gold quite significantly, and we've but since then we've moved back really nicely and positively. And you couldn't, with all the worry in the world about the Israel striking Iran over the weekend, that gold market candle pattern doesn't reflect that, does it? That's what the point I was trying to make. It was really We've seen the big move in the European stock markets, the Asian stock markets, and the oil market, but gold hasn't reacted as many were expecting, say, as me included. So, is that a suggestion that the gold rally is really running out of steam at these levels, or are the countries involved going to have to worry about selling their gold to pay for all of this ongoing conflict? But again, time will tell. We can't guess that at the moment. But we did have a wee gap on open this morning and rallied, and then gave back in the early couple of hours of trade, and then pushed higher into the European Open again. And then we slipped, and then the strength of the dollar again at the US Open has pulled gold back. So today we've been to 5,418, and we're back to 5,322. So here, if you're trying to trade this on an hourly time frame, that would have given you a short eventually, or well, that wouldn't have worked out because that would have been short. You then got stopped out. That's gone long again. Then it's crossed here. So you'd have been short there from 10 o'clock this morning, interestingly. On the hourly chart there on gold using this strategy, and your stop loss would have been up there initially. So you'd have just about stayed in as that's moved down. As long as you hadn't moved it to the top of that body of that candle, you'd have taken out here on the 1 o'clock candle. But, that's both a continuation trade, because this has really dipped down now, and it's a big body candle. So that would have been another, again, I'm talking about the hourly trade now. If that you'd left your stop loss on entry, which would have been up there at 5,418.74, the entry would have placed here at 10 o'clock. You'd have got long there. Yeah, you probably might have been spooked out on that 1 o'clock arrow. But let's assume that didn't happen. You left it there, and the spread didn't take you out. Target one would have been hit there at 5,350. So from 391 to 52. That's a nice big 400 point gain, and you're still short for the second half of that trade because this is still moving down quite substantially. And so far, our low in the US session at 5,360, interestingly, is where we opened the week and the month with all the news that was pouring out over the weekend. So 5,300 is obviously the next support level, the next downside target for gold. Can we hold over that? And then the gap from Friday's close at 5,277. So there's a good $20 odd gap, $23, $25 gap from Friday's close to Monday's or Sunday night's open, but not as substantial. And then the follow through buying, not as substantial as many thought. But again, trade what you see, not what you think. So gold remains bid. Again, just flip back to that daily time frame. There's nothing in there today that move higher is stop. Well, sorry, let me just correct myself. That move higher is moving higher. It's not a massive candle today. The top of the Bollinger Band is flat, and we've got a touch here now on the K and the D line. We haven't crossed, like we've touched there, we touched there, we touched there, and we kept going up here for gold once we were in the upper half of the Bollinger Band here at the end of February, 20th of February, and we've moved higher again. So, just be a bit careful trying to just keep on buying the gold market. But at the moment, it's moving higher. And don't forget the end of January when that big shakeout shook out a lot of these weaker holders as this was moving up. But we have held $5,000. We have held $5,100 all of last week, and now we're at 5,200. As I said, 5,325, having been as high as 5,425 this morning. So let's see. Obviously, the regime collapses quickly. Whether chaos ensues or whether there's retributions or all that sort of stuff, or it's a clean handover, but it's going to take months, not weeks. But I mean, there's 90 million Iranians in the world, huge diaspora, as well around the world, as well as obviously everyone actually in the country itself. Huge potential, massive geographical country as well, and obviously has a very key geographical position in the world as well. And huge, lots of resources as well, not just oil, but lots of other key natural resources, and obviously a huge cultural history and massive tourism potential as well. The Iran, and the wider Persian area. Anyway, gold bid. So say everything is doing what we might expect given the horrific news that's running the world at the moment. The only market I can't show you here is the is the treasury markets, but again, they've responded in kind with yields under the benchmark US 10-year treasury under the rate under 4%, 4.8 something it was earlier, but it's drifted back up during the live sessions, during the European session this morning. I haven't actually seen it recently, but anyway. Guys, if there's any more questions, there's no more questions, I'm going to wrap this up because obviously things are being driven by the politics and the news flow out of Washington and obviously the Middle East, Dubai, Abu Dhabi, obviously Tel Aviv and Israel, and obviously Tehran as well. So stay safe, everyone. Be kind. Let's hope this comes to an end very quickly and there's no more unnecessary lives lost. Take care, my friends. I'll see you tomorrow. Be safe, and as ever, may the pips be with you. All the best, everyone.